Across the financial sector, companies are moving billions of dollars in cash to support small businesses during the pandemic. Joining us now is one FinTech CEO with more on what he's doing, as well as some news of his own. Here now, Anthony Noto, CEO of SoFi. This is not out yet. Anthony, bring it to us. Anthony, on terms of this acquisition. First international acquisition for SoFi. And the second acquisition in the last month.
Hey, Joe, thank you for having me this morning. And first, I think it's important to just acknowledge the incredible challenges the American people and the people around the globe are facing by this unprecedented event and tragedy that we're seeing every day in people's lives. Our objective is to help those people deal with the day-to-day challenges and make it easier for them to conduct their financial lives during these difficult times. We have been fortunate that we've been planning for the last 2.5 years for a recession, but no one could have planned for what we're experiencing now in such an unprecedented way with unprecedented challenges. Our company's been able to operate 100% from home during this time and give people the ability from their phone to borrow money if they need to do that, to pay their bills, to deposit their checks, to pay their friends, and also if they have the time to invest in, which is a critical element for the long term. We're very proud to be able to announce today our first acquisition outside the United States. We're going to be entering Hong Kong, the financial hub of Asia. It'll be our first market, our first product. We think it's a unique opportunity to bring our mission to outside the United States to help people around the world achieve financial independence. And so it's an important first step, and our ability to do this during this time is a reflection of the hard work of the SoFi employees over the last 2 years to build out our strength in the U.S. to give people a complete suite of financial products on their phone.
So during this entire situation where everyone's at home, you've been operating, as you say, from home, but actually some of the guidance you've given, what you've lost in some areas, you've actually gained in other areas, as I understand. Travel you've lost, groceries you've gained. So it's net business for SoFi is actually okay at this point?
Joe, I think what you're referring to is the spending of consumers through our SoFi Money account. So people can deposit their income, their direct deposit from work in a SoFi Money account. They're using that account and their debit card to buy online, to buy things delivered to their homes. And so the spending amount per individual through SoFi Money has remained relatively constant. We've been able to operate across our lending businesses. We provide unsecured personal loans. We also refinance student loans, refinance home loans, and allow individuals to invest if they want to do that, all on the mobile app. And we're trying to meet the needs of those people from our products directly, as well as small businesses indirectly. We're not in the small business lending business, but we've supported and created a marketplace for small businesses to come and apply through the PPP program, and we've been able to do that. But overall, we've been able to really manage through the challenges of the environment. We've had to be a little bit more cautious on where we lend and how we lend, but so far, so good.
So you would say that in terms of a lot of businesses, this has been an environment where your business model has been more effective in dealing with the state of affairs right now.
Yeah, Joe, we've both talked to each other through 3 financial crises now. And in 2000, 2001, 2002, and 2008, 9, and 10, I was at businesses that got directly hurt meaningfully by the lack of demand. Well, financial services is a product that people absolutely need right now. The ability to do that on their phone is critical, and being there 24/7 for them is also critical. So the demand for what we do is high because these are just unprecedented times in people's lives where they can't get out of the house and they shouldn't get out of the house and they need to stay sheltering in place and being safe. Our product uniquely can be all done at home across your entire financial life, whether we offer that product or some of our partners offer those products. So we've been able to navigate through it. It's not without issues. We're dealing with unprecedented things like the rest of the people in the world and finding new ways to do business. But so far, so good. And we've had to, cut back in certain areas just to be cautious and make sure we manage our liquidity and don't overextend ourselves with the recession that's obviously impacting the economy globally. But so far, being able to service our members 24/7 has been something we've been able to do. And we're looking for new, unique ways to help. And we're in contact with the Fed and with the Treasury on new programs that we think can help Americans. A large percentage of our users are doctors and lawyers and small businesses. And for the first time in their lives, they have zero income at no fault of their own. And so we're seeing really unprecedented desires and needs But because we're all on the phone and we have the complete suite of financial products, we can meet some of that demand. Unfortunately, we cannot meet all of it.
So if the title of an article is that this is FinTech's biggest test and greatest opportunity to go mainstream, you would not disagree with that. You've doubled your brokerage account since the beginning of the year, for example. So this is a crisis, but also an opportunity for FinTech.
Well, what we've seen is this unprecedented counterintuitive trend of people wanting to invest more. And so we saw a pretty significant surge in investing in the first quarter. We still see strength in the second quarter. Our desire to go international reflects the desire of young people, new and beginning investors, to invest in U.S. Markets. And so our acquisition of 8 Securities in Hong Kong was really built on the back of that secular trend that we were seeing in the U.S. Millennials and Gen Z want to invest. They need to invest if they're going to achieve financial independence. And so acquiring 8 Securities in Hong Kong focuses on a very large gateway to the Asian markets for financial services. It's a product we know that Asians want, that are millennials and Gen Z, just like those in the United States. And it's a first important step. And to your point about the headline, this is a chance for the FinTech companies to step up. They're mobile first. They're building great products with unique value, without fees in many cases. Our product in Hong Kong will be commissionless. You can trade stocks, ETFs, also do auto investing. You can do recurring investing. And we have a whole product pipeline in Hong Kong, similar to what we've had in the U.S., and we've seen strong desire behind that product in the U.S. And it'll be our first product in Asia and our first market.